Chapter 1 is called Costing, and it focuses on absorption and marginal costing. Now these two costing techniques you will have seen before in your management accounting studies. As they were examined quite comprehensively in F2, these will not now feature for an entire question in F5. However, these areas are areas of brought forward knowledge. So if we just pick up on some of those key things within Chapter 1, as I mentioned, overhead absorption rate, very key. You may use this as part of an activity-based costing question. Might have to compare the cost of a unit under traditional absorption costing with activity-based costing, which we'll see in Chapter 2A. Now remember, overhead absorption rate, you're looking at your budgeted numbers here. You've got your budgeted overhead costs over your budgeted activity level. Now I suspect if you're given a question on ABC, you'll either be given the OAR or told what your activity level will be that you need to use to calculate it. However, if you're not, just bear in mind the bases that you choose to use. So we have a look in section 3.3. The most important bases are these top three. Basically, per unit should only ever be used if you make one unit. Okay, even if you make one unit, i.e. Mars bars, and that's all you make, if you make different sizes, so let's suppose you make the fun size, the regular and the king size Mars bar, if you just use number of Mars bars within your overhead absorption rate formulae, all of those various sizes will get the same amount of overhead. Now clearly it's not fair that the little fun size bar should get the same amount of overhead as the king size. So if that applies, you've got different products, you need to go with a method of time. Now that will either be labour or machine hours. And you need to choose, if you're not told, the appropriate one based on the type of process that you have. If you have a machine intensive process, and so you therefore have a lot more machine hours than labour hours for each unit, then you would use machine hours and vice versa. So let's just have a look at the answers that hopefully you got to example 1. In example 1, we had to prepare an income statement under absorption costing. Not highly likely that you would have to do this in the exam because you won't get a question, as I said, in its entirety on absorption costing. It's possible though that you could have to do something like this in comparison with a different costing technique, potentially with throughput accounting, and we'll see that in Chapter 2E. So you should have made sure that you dropped in your easy numbers first into the pro forma you were given. So we were told a number of units that we sold and the selling price. We were told we had no open inventory. In terms of the variable production costs, we had $6 here. Now make sure you're just picking up your production costs. The selling and distribution variable cost that you were given features further down our income statement. Let's have a look at the bottom half of that income statement. We can fill in very easily those non-production costs. Now what we're left with are all the items to do with our fixed overheads. So if we have a look at getting to full cost of a unit, you can see here we've got the variables we need to work out. Okay, ignore slide 26. So if we have a look at working out that overhead absorption rate per unit, we know our formulae. We know that our budgeted overheads were $8,000 and our budgeted number of units, was the only activity we were given in this question, was 4,000. So you should have come up hopefully with an overhead absorption rate of $2 a unit. Now obviously we need to get that $2 a unit into the income statement, and we'll do that by looking at our overhead absorbed. Take our actual activity multiplied by the $2. Once we've got the overhead absorbed, we can compare that with our actual overhead to see whether we've charged our income statement with the right amount. So here's our absorbed overhead, 4,400 units that we produced, times the $2 was 8.8. The actual overhead though was only 8.5, so we charged too much to our income statement here. So we need to reduce the cost in our income statement by $300. So let's just bring in those two items. And all that's left for us to do now is to deal with our closing inventory. So first of all, calculate your units and then we can apply the cost value to those units. So we had no stock at the start of the year. We made 4,400 units, sold 4,200 of them. So we had 200 units left in our inventory at the end of year one. Now, because we're dealing with absorption costing, we need to value those at the full cost of a unit. So that's our variable cost of 6 and the $2 overhead absorption rate for those fixed overheads. So we're going to value these at $8 a unit each. So our inventory will have a value of $1,600. So again, drop that into your pro forma. You can then work out your cost of sales, your gross profit, and get that down then to a net profit. Okay, so if we then look at the key aspects within the marginal costing, key term here is contribution. And what you should note here that your contribution is your selling price per unit less all variable costs. So not just the variable production cost, but also the non-production, so your selling, distribution and admin cost. And that gets us down to contribution. So in our marginal costing income statement, you won't see gross profit. Instead, you see this contribution level. From there, we deduct our fixed costs and get to our profit. So again, if we have a look at the lecture example here, much more straightforward. Because there's no carving up of the overhead. So most of the numbers here are exactly as you saw them before. Closing stock obviously this time is only valued at the variable cost of a unit, so the $6. And we bring all of our fixed costs in total, which gives us a profit of $2,100. Now you could have reconciled those two profits using the formal pro forma here, although very unlikely that you'd probably have to do this in F5, but remember this is all about your brought forward knowledge and understanding that the difference in the two profits is about the element of overhead that you have in your stocks. Okay, so you could have used the formal approach here, or you could have used the little word cyan that you've got in your notes there, and this helps you to remember, if you can't remember whether you're adding or taking off opening, closing stock, it helps you to work out which profit will be most. So if your stocks are increasing, your absorption profit is going to be more. So we take the change in our stocks, times it by the overhead absorption rate per unit, and we know which profit will be highest depending on whether stocks have gone up or have gone down. So having completed that for year one, we need to do exactly the same thing for year two. So using those same principles, you should have come up with gross profit of 7.1. Now here, your closing inventory from year one becomes your opening inventory for year two. And in terms of that under or over absorption, well, this time we absorbed 7,600. Actual overheads are 8,500. So we need to increase the cost by the amount of the under absorption, which was 900. So we then get from that gross profit of 7,100 down to a net profit of 1,100 by taking out those non-production costs. So if we then have a look at year two, you can see here that this time we have contribution of $12,000, getting down to a net profit of $1,500. So if we were to look at year 2 using SIAM, we know that our change in stock is a reduction of 200 units and our overhead absorption rate is $2 a unit. So we've therefore got a change in our profits of $400. With SIAM, we know that our stocks increase, we get more absorption profit. Here we've got stocks decreasing, so we're going to expect to have a lower absorption profit. So absorption profit should be lower than our marginal by $400. And we can see that that is the case here. Okay, so the key things for us from this chapter was your overhead absorption rate. So remember that's your budgeted overhead divided by your budgeted activity level. And that activity level will probably be either units, labour or machine hours. Remember, we've got to use the most appropriate for the scenario that we are given. The other key area for us is contribution, and remember that's your selling price less all the variable costs of your unit.